There is the main story on the mining Ndaba, which has actually been going on yesterday, which kicked off yesterday, and a lot of our private sector and our delegation are there trying to crack as many deals as possible, trying to bring inflows and see if they can revive our mining sector, which last year pretty much dwindled into one of the worst performing sectors. So into one of the worst performing outputs and really dragged a lot of the exports. Though there was positive growth from the non-traditional export sector, it appears the mining sector did have a very slow year last year. But remember that we have the strong, ambitious goals as a country to try and get our mining sector up to 3,000 metric tons a year. So that was the biggest story, I think, coming out of the Indaba, that there are deals being done, there's side dealings, back dealings, all sorts being done. We wait to see whatever comes out of that. But remember that we've even seen the private sector going there, trying to make sure that they can gather as much in terms of dealings directly. Because one of the things I can always rely on, Vernon, is that the private sector is an action sector. Whatever is said, unfortunately, in our state, look, those things take long, there's procedure, but private sector companies generally, when they want to do something, they tend to do it. They tend to actualize it, and they tend to bring it forward. Now, most people really don't have a good say about that. So one of the main stories, I think, obviously, was the mining Indaba conversation. But now going into how markets have opened first, let's just first quickly grab onto that. Kwacha is really moving at a very weak pace, and it's actually quite concerning as to how badly we're seeing this. Moving. One of the things we're seeing that I'll try and get everyone to see this, is that over the past 2 months, the Zambian kwacha has moved negatively from 17.28 to 19.91. So this has been a continuous negative slide of the kwacha, which has probably led to most of the gains, if not all the gains that have come in. Now, when I say 19.91, I know some people will look at me and say, but Munyumba, when I go to the bureau, it's much higher. The rate we're quoting here is called the interbank rate. It's the wholesale rate it's the wholesale rate for FX. So there's two markets for Forex. There's the first market is the one that you deal with. That's called the retail market. That's where when you go to the BOZ website, you'll notice that there are two specific types of rates that are often mentioned. And the one which we cite is the wholesale rate. That's the one that we pay that we pay immediate attention to, because that is the base rate, the lowest they can be. But as you can see in the chart of the wholesale rate, going from December 2020 to today, which is 6th of February 2020, we've seen the kwacha slide from 17.2 all the way. It's like a straight line movement all the way up to 19.19. And then you can see, and what you need to know is that the time the president moved into office, the time that he was elected in, or the time elections happened, or pre-election era in 2021, August 2021, we actually saw that the kwacha was a 19.34. So for the kwacha to go all the way back up to 19.19 in terms of the interbank rate signals that most of the confidence that was brought in by the administration through the FX rate has effectively worn off. And it seems as though there is actual fatigue waiting for this. And remember, Vernon, this is a time when we're starting to hear about record amounts of money being traded on the other markets in terms of bonds around the world. So it appears our capital markets are not bringing in as much FX as they should be, because that's usually the competing side with mines. So we've got a weak mining sector, which had poor output last year and poor levels of export last year. We've got a financial sector that's not attracting any foreign investment into its bond sector. And unfortunately, we have record high prices when it comes to fertilizer, and fuel prices are still elevated. Though they're still coming down, they're still elevated around the world. And this reflection of the 17.28 moving up to 19.91 is the factor that has played that. Now, we had the conversation recently about the central bank trying to get involved to try and bring this down. It has no impact, unfortunately, as of yet, meaning that we're probably going to see even more aggressive actions by the central bank. And I want to show you why I believe that we're probably going to see the central bank have a bit more, probably take a stance on interest rates a strong stance on interest rates, especially while the FX rate and inflation risks are starting to show. Let me pull this up quickly. This is what we call this is from our banking data that we've been doing. Remember, I'm doing my bank summaries of late. And this is what we call banking sector non-performing loans. This is the percentage of the loans sitting at the banks which are actually non-performing. Okay, so the reason I suspect that we're probably going to see, if you look very carefully at the final one, which is December 22, you see that the non-performing loans, the percentage of loans which are behind on payments, who are not performing as they should be, these ones are down to the lowest they've ever been, 5%. Okay, last time we were matching 2014 when we had the lowest. Now, if we've got very low, usually the central bank says one of the reasons, let me try and zoom in there. This is what I mean when I say that they're at the lowest they've been of 5%. One of the reasons the central bank always argues and says that we cannot raise interest rates, they put up the line of financial fragility. They're always saying that there are fragilities within the financial sector. There's problems in the financial sector that if we raise interest rates could cause problems. Now, if you've got non-performing or delinquent loans, not fully delinquent, but those that are heading to non-performing loans down to as low as 5%, while the loan book is still decently growing, and I'm talking about this is of the percentage of total loans, then that means that the fragilities are pretty much washed out. So in 2020, this got up to as high as 11% because of the pandemic. 2017, it got as high as 12%. And if you look at 2010, like that was the most brutal year. The non-performing loans were sitting at about 14.8%. So you can see from 2008, due to the global recession, the amount of loans that were falling behind got to a high in 2010, and I think it started to drop back down. Then they picked back up again up to about 2017 when the central bank now started to come in with strong rates in 2016. Obviously, that started to pull this back down, probably 2017. And it appears that obviously the pandemic played its role in 2020. But now we've gotten to a point where non-performing loans are the lowest that they've ever been. And we've actually had a year in 2022 where we've issued out 5 billion kwacha of loans to small businesses. So evidently, we can actually get to the point and state that non-performing loans does signal that we probably will see that the financial fragility argument has finally probably run its race and run its course, and therefore we probably will see an interest rate hike. If not this session, then probably the next one, especially if inflation persists. So that's part of the main news that I've actually been looking at in terms of the FX rate. They are trying to try and rein it in. They've tried to rein it in with the reserve ratio, which will kick in on the 13th. So you have to wait for the 13th to see what impact that'll have. But then there's also the potential of a rate hike. If not this session, probably next session, should we see persistent inflation, persistent currency loss. But the main news in the FX market is that all the gains, there's only about 10 left of gains that has come from the positivity of what we call, quote unquote, the Bali rally. That has pretty much run away now, and we are back to pre-election levels of the FX rate. We're not back to the 20s that we got to in the way pre-election, but just before the election, we did have that quick burst of FX where the central bank and the government did offload about $30 million onto the market, moving it from about 21 to 19.35. So now this is where we are trying to get back to trying to see if we're going to get back to pre-election levels. The Rand is still trading at about 1.09, had a weaker day, down by 2.24%, while the Kwacha was up by the dollar was up by 0.09%. So your dollar assets are still trading relatively strongly. When it comes to our bond markets, we're seeing a 0.15% growth in Zambian GRZ bonds on the secondary market, with about yield to mature year to date, we've actually seen about 3.35% growth. This is probably going to get overshadowed by the fact that we're probably going to see higher inflation in the first quarter. In the second month as well. February, please brace yourself. We'll probably see it because of transportation costs that are reflecting in food prices. Now, I know one of the main stories that we're seeing in our five things to know today is that we've seen that FRA has agreed with the millers to sell 25 kg bags of milli meal at 160 kwacha in Lusaka and 170 kwacha from 205 in the Copperbelt in order to mitigate escalating milli meal prices. Well, here's the problem. Okay, if you're gonna sell a 25, if you're gonna sell Miller's a 25 kg bag of Millie Meal, FRA agrees with Miller's to sell 160 kwacha and 170 kwacha. So this is effectively price fixing. We've gotten to the point where we're effectively price fixing. No, I mean we it's always funny how we criticize the previous regime for this exact thing, when I think it was former Minister Lusambo was going around basically whipping people's heads, telling them to sell Millie Meal at 160 or even 130. And today we're resorting to the same tactics, but under FRA. But anyway, that's life, people. That's life. This is the beauty of politics. Everyone loves to think that politics is this clean game. Everything your friend is criticizing, they're going to do, because it's not really the politicians who make these decisions. It's the system of bureaucrats and people who are behind the scenes who make these decisions. And they've come to the point to agree with the milling. What happened to the free market? But anyway, this is the reality that we face. In, because you know what my concern about this is, Vernon? When you have price controls, because this is effectively price control, and you can call it an agreement, it's price controlling. In other terms, let me give it to you straight. Without the FRA there, because consumer protection, by the way, frowns on this. If all the radio stations in Zambia set a price together, okay, for advertising rates, do you think the consumer protection and anti-competition would come and smile at us, or wouldn't they investigate us for cartelistic behavior? Exactly. So this is the government effectively doing cartel behavior. I know it's to rein in inflation, but the adverse effect that may happen, okay, that usually happens because of this is most commercial farmers do not farm maize because government interferes with the price of Millie Meal. That is the number one reason why the commercial farmers will stick to soya, they'll stick to wheat. And the problem is this. The Manufacturers Association of Zambia stated that our biggest problem with maize, and he was talking for the milling companies at that time, president then, they're saying our biggest problem with maize is that the commercial farmers produce 3 times as much maize per hectare than the subsistence farmers. So in other words, they're 3 times more productive. But he said they won't grow it because of interference. Okay, so 95% of the maize grown in this country is grown by the least productive. So if we actually got productive farmers to grow maize, we'd actually probably have 3 times our output. And that would allow us to export. That would bring prices down, or that would at least create a lot more jobs and activity in the system. But why won't we? Because of things like this. No farmer, because the farmers are thinking, should I plant maize? The price looks great. It looks good. This looks fantastic. Now, when FRA and the government step in and say, we're bringing prices down to 160, and the millers step in, say, we're going to control prices at 160 to 170, then the commercial farmer says, now, if I try and sell my bags of maize, which has cost me so much in fertilizer costs, and I've taken in so much, and I'm looking to make a profit because I want to reinvest in my farm, they start seeing this. You know what they do? They step back and they say, maybe not. I'm not interested. And once again, our maize is continuously grown by subsistence farmers. So this is the reality, unfortunately. Sometimes, I think people may not understand it. Inflation is the pain that sometimes is needed to increase productivity. But I know that, you know, we don't have great pain threshold as a country, and we're not really revenue aggressive as people. One of the reasons why inflation eats us badly as people is that we're not really growth aggressive. We're very comfort zone oriented as an economy and as people. So because of the way we handle that, we tend not to be able to beat inflation with revenue growth. We tend to scream inflation down. Please bring it down, bring it down. My salary I don't really have ambitions to go up. And that's the unfortunate thing about our country. Now, I'm not saying that it's great to have inflation that runs away. It's not great. It's not good. But I'm just saying that there is a cost of farm-based productivity that's going to take place here. And then we're all going to say, but why is there enough maize in the market? I don't know. Maybe because you're controlling prices. So here's the problem with price controlling, is that it often eventually leads to shortages or undersupply, okay? Which eventually becomes too difficult to control because the next season, your farmers may just turn away and say, yeah, no, this is the exact reason why we don't get involved. So unfortunately, this is going to be a tough point. Now, the reason I brought that up is because in our bond markets, we're going to probably expect it until the next. We're probably going to expect persistent inflation until until probably the end of the quarter, and then we'll start to probably see inflation start coming down when we start seeing the harvest. Though my biggest concern, Vernon, here's my biggest concern: the amount of floods we've had in this country, except at Kariba, the amount of floods we've had in this country, all over. It does make me wonder how much of a crop output we'll have this year. Because that's been my concern. Brazil is about to have a record soya output and corn output, the greatest that it's probably had on record. Brazil, it's had the best rain season, and you can see that's happened, while Argentina is facing the worst drought that it's ever faced, and its farmers are about to have issues. So I'm wondering if the floods that Zambia has been facing will actually affect the crops, because these are serious levels of floods, not just in these areas. Like, we're hearing rivers bursting, like rural areas are really suffering here. So my concern, and rivers bursting everywhere except heading to Kariba. But anyway, rural areas are really suffering, and that's where your maize has to be grown. So I think the question has to come down to how much of a crop output do we expect this year, given the level of floods and the adverse weather conditions that we are facing. That's why at the end of this week, I would like everyone to tune in as I go through the Eurasia Group's top 10 global risks and which ones I think are probably going to pertain to Zambia. Those are going to be an interesting one that we're going to go through. But that is my outlook in terms of the bond market. Expect persistent inflation. I do see potential inflation risks in the amount of floods that we've been seeing, because I am concerned as to how much of a crop output we might likely have. So that is that's an outlook that we want to see. Let's just take a look at the rest of the bond market. In dollars, we're still down 0.7%.
We have a caller. I just want to hear what they have for us today. Hello, you're through to Money FM on Behind the Markets. Your name and where you're calling from?
Hi, Vernon. Hi, Muyumbo. This is Hams here. I think this is my first call for 2023.
Indeed. Appreciate you coming through. What's your take this morning?
Yes, I just a quick one for Muyumbo. It seems we seem to be in a merry-go-round. There are times maybe we have too much liquidity on the market, pushing up inflation. Too much liquidity, not matching up activity. I think what we have we saw on social media of cash, and there's a lot of cash flying around, but it looked like we had runaway inflation. So one would get the impression, because we seem to be in a system, so merry-go-round situation. Sometimes the business community, the song of the day is everybody.
That is
okay. Sorry, Vernon. I think we missed a bit, but I think I can get a gist of what he was saying. I think we can get the gist that we seem to be going around in terms of the business community. Sorry, in terms of the inflation story. Okay, I think, we're getting a little bit of a glitch when it comes to Vernon here. So just to answer, I think the questions regarding inflation and what was going on in 2020, in 2021, and what's going on now. The inflation story in 2021 was driven by a 46% growth in the money supply because we started printing too much money in the economy. I think you recall I've cited that 60% of the money in circulation was actually printed. Well, at least at the end of 2021, 60% of the money in circulation was printed just in the 12 months before the election. So that should tell you that one of the problems is that we had too much money in the system and too little economic activity, and that created inflation like it did around the world. How, let's say, for example, the Americans pumped money into their systems using stimulus checks and high levels of central bank intervention. Same was said even for the European Union. Same was said for a lot of the areas of the world. There was too much cash that was pumped into the whole world. Zambia overdid it. We seriously overdid it with the amount of stimulus that we put in. South Africa dropped its interest rates down to 4%, down to 3-4%, the lowest it's ever been. And that's how much cash they tried to pump into the system to breathe life into the economy. But unfortunately, the result was too much money was circulating. And when the economies reopened, it created inflation, huge amounts of inflation, rapid amounts. And I think in Zambia, the problem was that the money was not going to the private sector. It was the government literally just creating instruments to try and pay off things. And that created problems. That created huge amounts of problems and huge amounts of cash that were floating through the system, degrading the currency, and also creating too much cash for the limited supply of products that were there, be it meat that was coming in too expensive. So we were importing inflation, we were creating inflation. Now, fast forward to this year, we're having supply side shocks, which are breeding inflation. Be it the price of food that's actually going up, and be it the price of energy. These are areas, because the three areas are food, fuel, and pharmaceuticals. These are the three areas which are causing inflation. Pharmaceuticals, being the price of medicine during a pandemic, has gone up because of all of because that's an imported price, and therefore the cost of medicine have had to go up. These are supply-driven factors. Fuel itself is going up due to the global cost of fuel and also the exchange rate being moved down because of the exchange rate being moved down, also because of fertilizer costs. So fertilizer costs are harming the exchange rate, which is affecting the fuel price, but it's also affecting the food prices, because the fertilizer costs are then going to have to affect what's going on. And then also we're in the down season of crop output. So there isn't much crop because everyone is planting and growing. So you usually have this is what I call the inflation hill. So these are three supply side factors that are actually causing inflation. Unfortunately, this runaway of the exchange rate also has to do with the fact that we have no money coming, we have no dollars coming into our bond market from offshore investment, and therefore it's not able to offset the pharmaceuticals and the fertilizer costs, which are degrading the currency. So these three things, these factors all together are really harming the supply side. The reason I can tell you it's not demand side is because the money supply growth in this country is down to the teens now. The central bank has managed to control how much money is actually going into the economy, and it's actually slowing down money creation. So it's not demand side inflation, it's actually supply side inflation. Now there's a four factor view which you take when it comes to inflation. Inflation has caused 40%, and this is an old metric that we use, an old rubric that we use, but 40% of inflation comes from money creation, 20% of inflation comes from energy costs, 20% of inflation comes from supply chain problems, and 20% of inflation comes from excessive regulation, which in turn causes supply side problems. So 60% of it is always aimed at supply side, and 40% of it is aimed at money creation. And I think what's playing out right now is energy and a few supply chain factors which are affecting it, and also currency factors, because that affects the imported parts of our supply chain. So that's pretty much where we just want to round it up to in terms of the inflation story. Now, how do we try and control that in terms of bringing down inflation? Well, there is some natural part to it. Let me explain part of it. When you start seeing the exchange rate performing this poorly, companies that export, if you're looking at the stock market, look at the companies that export, be it Zambia Sugar, be it Chilanga Cement, these main ones who do a lot of exporting, they're the ones who are going to benefit a lot because their products are going to go into high demand. So when the kwacha gets weak, domestic products for export get into high demand, especially agri-food, because right now food prices are still very high around the world. So that means that Zambian food to its neighbors is still going to be quite appealing. So there is a correction that can come down the line, especially when we get back into harvest season. And eventually, also that happens to the Zambian consumer, is imported goods become too expensive, and therefore we slow down in selling imported goods, and therefore a correction starts to come about as well. But one of the factors the central bank is able to also play at its disposal is to make kwacha scarce by either selling a lot of dollars or reducing the amount of kwacha through the reserve ratio, and also through the interest rate mechanism, to try and slow down how much money can get to the front end of the economy and handle and basically can be used for kwacha speculation. Because one of the things they're also trying to curb are people who are borrowing kwacha overnight, buying dollars in the morning and then selling those dollars at the end of the day to make a spread, because the contraction of the devaluation of the kwacha is happening at a faster rate than the interest rate that they would pay. So they're actually making a profit off of it. So if you increase the interest rate, you increase the overnight lending rate, therefore you slow down those people who can speculate on the currency. Many factors at play here that can be pushed out, but this one is not money supply driven. It's supply chain driven. So remember that inflation, it simply happens when there's more money than there is stuff to buy. That's all that inflation is caused by. More money than there is stuff to buy. More money looking for stuff to buy than there is stuff to buy. Okay? And usually that can be curtailed by either slowing down the amount of money looking for stuff to buy or increasing the amount of stuff to buy. Become more productive. And usually when there's more money than there's stuff to buy, the next year, the producers produce more because they want those higher prices. And therefore, they end up overproducing and swinging things down. The best example for this has always been tomatoes. Whenever tomato prices go up too much, everyone runs in and becomes a tomato farmer quickly. The prices come down because of oversupply. So that's the effect that usually happens. It's a seesaw of the economy, but in there's usually trends of growth. Hopefully that can stick through a lot of people. Other news as well, Vernon, is that we have seen interest rates slowly coming down a click. Now, quickly just looking at the commodity market, copper prices are at 8,894, down 0.96%. Still, we're getting negative news, but there is a little bit of pickup from China demand. China is switching back on, and therefore we're seeing Chinese demand, and we're seeing it reflect in oil prices, which are up to 81.25. Gold prices up 0.89%, because we're still in recession mode. We're still thinking that there probably is a recession around the corner. Therefore, gold in kwacha is up 0.98%, and year to date, gold has had its first down week of the year, down 1.9% in kwacha, but up 9.14% year to date. Still one of the best performing assets. And if you're a crypto trader, you had a good week last week. You had a bad day yesterday. 1.94% down for Bitcoin traders. For Bitcoin holders, your portfolio was down 1.74%. And if you had Ethereum in your portfolio, 0.95%. It's down in kwacha. And year to date, Bitcoin is up 46.8%, with Ethereum up 45.4%. So those are the major stories, Vernon, that we've picked up on the major side of the economy. And obviously, everyone is waiting positive data coming out of China. I just want to quickly run through something, Vernon, when it comes to the banking data that we got. I'm going to share something here quickly. And this is just a quick summary that we picked up of bank data to do with loan distribution. And this is an interesting table because it speaks to where are loans going. Because remember, the banking sector, I said, experienced a little bit of a growth in the loan book. Not that much, but at least a significant growth in the loan book. Not as big as the securities section, but at least the net loans and advances in the banking sector grew by 25% in 2022, while the government securities sector, not 25%, grew by 19% in 2022, while government securities grew by 30%, driven by a 52% growth in government bonds. But we've seen a 19% growth in net loans. And here's what we've seen, in a 17.7% growth in gross loans. So if we look at the loans position here, this is a distribution of the loans that banks had. And quite interestingly, this is in order of who actually were the fastest growing or the biggest contributors to that 17 to 19%. And the leading sector that was actually one of the leading factors of loan growth by the banking sector is actually manufacturing. There was a 91% growth in manufacturing loans, almost double in terms of the manufacturing loan book. That's actually good news for the economy, above the 27% 5-year average, and therefore manufacturing has become a bigger weighted. This speaks to, by the way, Vernon, us trying to say that we want to now support industrialization, seeing banks issuing out this many loans in the manufacturing sector. Second to it was mining and quarrying. 1.3 billion kwacha of mining and quarrying loan book altogether versus obviously the manufacturing 8.3 billion kwacha out of the 52 billion kwacha loan book. That was mining was also up about 124%. But the fastest growing sector of loans that were issued, it's still not the biggest because it's still only about 3%. But the fastest growing sector was actually personal loans for mortgages. The mortgage industry actually saw the biggest growth with 4.9 billion kwacha in mortgage loans and personal loans. Remember that we talked about personal loans growing by about 22%. We saw that personal loans were up, but it appears one of the key drivers of loans to households was actually to buy or build your household. So actually we're seeing good, this is a good stat for the future of the construction industry, so especially cement stocks. So we are seeing industrial activity in this country in captured by the first three. And we did see most of the sectors see positive growth instead of credit in terms of credit. We saw the transport sector increased by 29%, wholesale and retail increased by 24%, and financial services increased by 47%, probably from the previous year. So you can see that most of these sectors picked up. The worst performing sector, I think, which was which should be questions. One of the bad performing sectors is agriculture and forestry. So household construction got more loans, but corporate construction seems to have a problem. So we actually have seen that there is a little bit of a problem here with the corporate construction, which the loan book has kind of shrunk again by 15%. But because I think, look, man, what are we building? Any malls, roads are down, all sorts of things. So we're not really building as much stuff in terms of the construction and infrastructure industry, but we are seeing that people are building homes and they're getting loans to build homes. And that's a good sign. So we are seeing competitiveness trying to push out loans for people. Now, the interest rates are going to be questioned in terms of what interest rates people are getting, but it is a decent sign, Vernon, to speak to the growth of the growth sectors of our economy, that we're targeting manufacturing, mining. We're trying to get households to get more access to capital, and probably if we can get agriculture to start to get more capital moving towards it, then this will be a good sign for the economy as a whole. But a 25% growth in the loan book. So, I mean, a 19% growth in the loan book, mainly stimulated by manufacturing, mining, and mortgages. The three M's that are really driving the growth of the sector. But for me, it's at 206% growth in mortgages. Whether that's translating into people being able to access it due to the interest rates, that's a different story. But mortgage loans are actually quite good. Now, let's now quickly move into our sector as we start to talk, Vernon, about personal finance. It is Tuesday, and I wanted to leave us with a simple note on personal finance today. I always mention, Vernon, that the high five goals of an individual in terms of their finances are harvest, which is your retirement savings or your pension, health, which is a big cost. And I always bring up health because 60% of millionaires are worried about their health. You should always be careful about trying to get money at the expense of your health. Your health is the baseline, okay, with which your ability to experience and enjoy your money. The purpose of your money is to share and enjoy it. Now, that doesn't mean you burn through it today. I'm going to quickly settle here, Vernon, for a quick statement. And I'm not going to show the poster because we are a Christian nation and I can't show that level of picture. But there was a story yesterday that Bloomberg issued out that people are liquidating their pensions for Beyonce tickets. Now, I understand seeing Beyonce. Look, I always say one of my greatest memories in life was going to Global Citizens back in 2018 and seeing that performance of, I saw all these people, but at the end, it ended with Beyonce and Jay-Z. And we were even in Golden Circle. I was able to touch the stage. That's how close I got. And trust me, that woman is worth her money. In terms of performance, she is one of the greatest performers you can ever see. Okay? But why would you sacrifice your financial future for that instance? Look, people, save up for tickets for things like that. If you want to go for things like that, those are experiences. Get to that level in life. Learn to make more money, but do not go and liquidate your pension or start selling pension, start liquidating part of your pension or dipping into your retirement. Because I'm telling you that the memory of seeing Beyonce is not going to be good at the time that you're suffering in retirement. You know, I'll tell you what happens, Vernon, when you liquidate or go into debt for a moment. You know, usually memories, Vernon, are beautiful to remember and to help us relive them and go back to a joyful time. And it's wonderful. But if that is the reason you are currently suffering financially, you're going to attribute that decision to your current state. And you're then going to end up hating the very memory you wanted to build, and therefore it loses its long-term value. Okay? So as much as people think this is a good idea, it's a bad idea. Okay? It's a very bad idea. Start dipping into your retirement savings for tickets to a concert. Okay, but go ahead, people. Look, like I said, the woman is worth watching, but not worth that. Okay, your financial freedom and your financial peace are the most important things. And so I always say that Harvest, it's a funny story that crept in, but Harvest, health, and higher education. Another story has come out, Vernon, I think there's another financial scheme or whatever, which has unfortunately had issues with members losing money, or members not being able to acquire whatever they wanted to acquire. You know, these are not necessarily scams, people. Sometimes they're just unsustainable. That's all they are. Some of these things are not even necessarily scams where people nefariously want to take your money, like Ponzi. Ponzi was just taking people's money. And some of these people like Shopee Mall or Go Live or Go Like, and Wapi. Sorry, I laugh because whenever I warn people about these things, when they always turn around and they say, no, us want to make money. You're trying to stop us. You want to be, and I keep telling you, okay, but when you get burnt, you're on your own. Just know that my sympathy is not going to be to help you. Mm-hmm, yeah. But anyway, usually people don't assess rates of return. They don't assess terms. Everyone is always trying to get where they are too fast. Usually speed kills. Let me tell you one thing about investment that is the same as investment or finance. Speed kills. Trying to get somewhere too fast is a huge reason why people often get scammed, swindled, hoodwinked, or things go poorly. Or not even just scammed, or usually just they end up part of toxic investments, or they put money in toxic places because things just go poorly. That's where the problem goes, because they're rushing. So slow down, people. Do things the long-term way. Don't overestimate what you can do in 1 year, and you tend to underestimate what you can do in 10 to 20 years. But quickly, Vernon, as I was going down that route of Harvest, health, higher education is the third most important thing, because usually what happens to a lot of people, Vernon, is that they liquidate their pension to try and get their children through school, and then they have nothing to live off except their children, and then their children become their retirement. So this is what ends up happening to a lot of people. They keep on using their gratuities or liquidating their pensions, but then they end up at the end of their life with no assets to be able to take care of their cash flow needs, such as food and those things. So here's what you need to recognize in terms of the cost of things. Your child is going to face a huge financial burden when going to college. And I want to show you quickly, Vernon, before I drift off, the cost of college. For people, I've shared this for people so that you can see. This is an estimate that we've done at our firm for the cost of college and what a student loan would mean for your child. So already, I want you to look at, this is based on 2021, 2022 fees. We're going to be updating it very soon so that people will know what savings amounts to be doing for their children. We'll be releasing our updated graph very soon. But this has got to do with terms of student debt. Now, Vernon, I've seen your eyes open very wide. I wonder if you're one of the victims here. But when it comes to student debt, you're seeing that science degrees at the end of 4 years, in terms of, because people are busy campaigning for meal allowances and those things. People, you know that your meal allowance is a loan. That's going to be repaid back at 15% interest. Your meal allowance, your accommodation, your tuition fees, and your book fees. These 4 fees, your books and your project allowances, they're going to be fees that you're going to pay back. Please remember, meals, projects, books, meals, projects, books, tuition. you are going to repay all of these back, an accommodation with an interest of 15% with only a 1-year grace period to start repaying them. Science degrees at the end of it are estimated to cost about 252,000 kwacha. Okay, your art degrees are going to cost you about 191,000 kwacha. Medicine after 7 years is going to cost you somewhere around 305,000 kwacha, if not 320. So we're going to check what these numbers are looking like. Probably we'll release our new figures coming in for this annually so that everyone is prepared. And what does this mean in terms of saving and investing? This means, Vernon, that a person should be saving and investing. If you're looking at getting a local degree for your child, from the day they're born, you should be putting aside about 400 kwacha every single month into a fixed income fund to be able to support this. If you want them to get a science degree, we should be talking about somewhere towards 500 kwacha from the day they are born, invested to help make sure that interest plays a role in also helping your child get an education. And those numbers increase drastically every single year. Why do we want to avoid this, Vernon? One, the people who can afford it should not be getting student loans. Student loans should be preserved for people who are absolutely in need and have no way. The vulnerable who had the grades to make it to college, those are the ones who should be getting student debt, not everyone. If you were working, then you should have been saving for your child's education. That's something you should be doing. And the earlier you start, the cheaper you make it for yourself and the easier you make it for yourself. Tomorrow, I will share with you some of the figures that we should be putting. It's just time has not been our friend today, but I will share with you some of the figures that you should be looking at for saving and investing for your child's education. And we will be giving you my firm's new numbers that we're doing. But effectively, Vernon, that's one thing. Two, if you are the bottom row there, I want us all quickly just to focus on the bottom row, okay? The bottom row is how much a person will be repaying monthly, okay? How much would a person be paying monthly, all right, in terms of repaying that student loan? So if that 252,000 kwacha, 389 is your student loan, it is expected that on a monthly basis, you will be paying 472 kwacha, 4,072 kwacha from the first year you start work. Now, Vernon, what's the starting salary of a person? What is the starting salary? So this is why I tell people, assess your degrees. Assess the degrees you're going to get into debt for and be very careful about this. Because if you just go and say, I'm just getting any degree so I can get a job, the first 10 years of your life will vanish. The first 10 years of your working life will vanish, paying back debt. You can forget about things like getting married. You can forget about things like moving. You can forget about things like acquiring your first. You can forget about the rites of passage of life. Your life will start at 35. I'm honest with you. If you do not do this math correctly, your life will start at 35. You can campaign, pump your fist, do whatever. Your government is broke. They don't have much wiggle room. The best we can do is ask them to bring this down to 9%. Final statement, Vernon, is that one of the biggest problems that student loans do is that they artificially stimulate the demand for debt, okay? They artificially stimulate the demand for debt, for degrees. So because we're giving people loans, now more people are going to college and the universities are saying, oh, we're strained. We need to hire more. We need to build more, so we need to increase the fees. So you're actually, what a student loan system does is it actually increases the fees. So we need more universities built, we need more competition in this sector so that we can bring down the cost. We are seeing rising competition, but this is based on the 2021-2022 fees. We'll be seeing more of this tomorrow as we try and break it down even further. But do the math before you go to college, people, because you can also get a diploma version to get started because the cost of university is out of this world these days. It's really high, people. You have to think about this carefully. And I'll leave that there.
That was interesting. Thank you so much. On the aspect of student loans, young people do seem to be very excited about getting into school and getting that scholarship, but what happens later, they seem not to be really aware. Thank you so much, Mtwale, for that insight. I really appreciate it. We hope to, and pretty much looking forward to the next session tomorrow.
Thank you very much, man. Have a wonderful day, man.